Well, hello there. Based on a request from a friend, I decided to show my positions on my brokerage account. So this is Thinkorswim by TD Ameritrade. That's the brokerage I use. And here you can see my working orders and my currently open positions. And the way I like to look at them, in addition to these Greeks here with the delta and theta, are what I primarily pay attention to. I don't look at the vega quite so much. And you can see the P&L open and P&L for the day, as well as the margin requirement, which is actually important as well, how much margin I have saved up to initiate new positions. What I prefer to look at these is over here on the Analyze tab. And I'm showing gold currently, but I'm going to focus just on my equity positions, and I'll start off in alphabetical order with the NASDAQ 100 index. So this Analyze tab, if you've never seen this platform before, this is a graphical representation of my position. And here on the x-axis we have the price of the NDX, which is currently priced around 4,874. And then over here on the y-axis we have the P&L for my position. And I won't go through the details of how these graphs are generated. Maybe I'll make a tutorial on that later. But you can see that this position it started as a butterfly, and it was at the 47.75 strike. And we had quite a bit of a rally last week on, well, all the equities, but on NDX in particular. And so as this market was rallying up, I had to move some of my 47.75 calls. This is an iron butterfly. So I moved some of my calls up here, my short calls up to the 48.50 strike or so. So I've gotten now myself into a broken wing position to minimize some of the upside risk in case the market continues to rally. My thesis is that it might hold around 4,900 and move back down into the middle of this range, and if it does, that'll be fantastic. Maybe I'll close it for a small profit. So that is my January position. Now I can come down here and select February, and it's going to also show a simulated trade I have here. My February position is a bit of amalgamation, and in the future, as I open a new position, this will make a lot more sense. You can see how these things develop. But how I started this position was with this back ratio. This is the experiment that I'm trying. Essentially, I'm selling two puts at the 42.50 strike. So I've got two short puts here at 42.50. And then to protect those on the downside, instead of just making it a vertical, I bought three more puts, but I bought them further away down here at 39.50. So I've got this little structure. And what I like about that is I've got this little swoopy line up here on the downside, which means if we get a really fast move or a crash, these puts down here that I'm long are going to gain a lot more value relative to the puts that I'm selling. And so this purple line, which shows today's theoretical price, is going to pop right up. And even though I've got basically a long position, I'm a bullish position, if we do get a crash and these puts explode in value, I probably could even be up a little bit money, but worst case, I should be fairly flat or just down a couple $1,000 rather than down the 14,000 that this would indicate is currently possible. So, but in addition to that, as we were sitting in the middle of a range, I sold a call on the upper part of the market up here at 5,100, which I sold, I don't remember exactly when, but it was somewhere back down in this range. So now with this rally, this 5,100 call that I sold for $14 is now currently trading at $30, which is not good for me. And generally, when this price doubles, that's an indication for me that I need to do something. I need to move this call. And so we're past my double point. And the only reason I'm hesitating and not doing anything just yet is I'm thinking this 49 level might hold, 4,900. So if we breach 4,900, then I will absolutely be moving this call, and I'll probably just roll it out. So I'll close the 5,100 and maybe move it up to 52. Maybe, I don't think I'll sell extra. I might just roll it up and then hope the market pauses, and maybe I can get a little bit more credit out of it, and then collect all the credit from my puts, just maybe get a little bit of this call, or at least minimize the loss, and then net come out with a win. And in addition to that, as the market started to rally, I added some more verticals. I did this just as a straight vertical spread, 25 points wide, from the 44.50 to 44.25. And so my overall position currently, I'm short about 10 deltas. I'm collecting $88 in theta every day. I really like to keep the NDX this ratio around 10 to 1. So this is not quite 10 to 1, but it's not bad. The Vega I don't pay as much attention to, as I mentioned, because generally speaking, I know that if we get a move down, implied volatility is going to increase. I'm going to lose this money on Vega, but as we rally back up and the implied volatility comes out, we're going to make that money back. So generally Vega, I just think of it as a net. It's going to come out in a wash eventually, and I'll just look to close these positions when I get a Vega crush, a volatility crush. So if I'm in the middle of my graph and the volatilities come out, I'll either take partial profits or close the whole thing. And generally I'm looking for half to 75% of the credit received. And you can see down here, these numbers show me where I am on the purple and the blue line. The blue line is the expiration graph. So they're showing me here at my peak maximum possible profit is about $5,500. So half of that, around $2,750. So somewhere around $2,500, $3,000. I'll take off part of these profits and then maybe trail up the rest and see if I can grab a little bit more out of this position. And February currently has 66 days to go. So there's quite a bit of time for this position to bleed out. So I don't really have to do anything right now. Next, I have a Russell position, which has been just a massive pain in my backside since Russell has had a massive rally in just the last couple of weeks. So I've been chasing this thing up. I've been selling extra puts. I've been rolling calls out and just closing the calls for a loss. And unless you go and keep track of each of the individual closed positions, this does not show me my overall P&L for this position. This just shows what is currently open. So I am not making money in this position. In fact, I'm down several $1,000s if I went through and itemized out every single position and what I closed for losses. So overall, this has not been a good trade for me whatsoever. Russell's one of the worst products that I trade. I really should just stop trading it, but I continue to find myself coming back and forth. Again, if you're not familiar with this platform, these are my actual open positions, which is what we're looking at right now. And then down here, I can simulate trades. And over here, I can go to add simulate trades. I can go to the option chain. And so I can use this just as an analysis that, hey, if I wanted to sell this other put, what does that do to my position? I can change my Greek, so I can do that for analysis. And I always do this before I initiate a trade. I come in and model what the changes are going to be. And I can hide all my positions, and I can just look at these positions by themselves and see what makes sense. So for right now, we can just ignore those and look at the current position as it stands. And so like the NDX, I'm slightly negative deltas. Here, honestly, this is pretty darn neutral. So I'm almost at the top of this little curve. In 2 days, the FOMC is making an announcement, so we could get a large move in either direction. Ideally, for me, I hope it just stays right here in the center. But I expect there's going to be some sort of move. A move up is my short calls are much closer to the money, so this 1390 is going to have to go. And the way I trade, with about 38 days left in January, I'm getting close to my comfort zone of I really don't like to be much closer than 20 days is about my limit. So I've got a couple of weeks that I could try to bleed these off, but if we really start seeing more upside on Russell, I'm just going to have to probably close this for a loss. Same thing with the 1400, 1420 vertical. Just start either closing that. Maybe I'll try to roll it one more time, but with 30 days, I think we're out of position to roll. I would really want to roll it out to February, but as I said, I've been struggling with Russell, so I'm thinking I probably just want to give it a pause, and I don't even think I want to continue rolling this into February and continue to struggle with this position. So my hope is that the market just kind of fades into a neutral stance over here, the holidays, and things slow down. Maybe it goes up a little bit, maybe it goes down a little bit, just stays a little bit in this range. I can squeeze a couple of $1,000s out of this, minimize my overall loss, and just get out of this thing. But realistically, we're probably going to see a larger move one direction or another. Of course, I don't know which direction. If I did, I would lean my position that way. But since I don't know, I'll just wait and see, and if it moves up, it'll take me out. If it moves down, I might have to defend some of this stuff since I've had to oversell some puts to try to neutralize myself. Overall, this is a messy position, and I've had to manage it much more than I care to. I really don't like this, so I'm looking for a reason to take some profits and be done with it. The similar predicament is the SPX, and so I'll hide everything and show you January. Let's get rid of some simulated trades. So it very similar to my other positions, just slight negative bias. That ratio is pretty good. I'm almost at the peak of this curve, and again, some very similar situation. I've got some short calls up here at 2300, and I had to sell a put here at 2200 just to try to neutralize as this thing really rallied hard in just a handful of days. I had some calls at 2250. I had to move those up, so I took a loss on those. And so once again, this is not the actual P&L of my position. It's much worse than that. But right now, this doesn't look so bad. It's just a matter of what is going to happen with the announcement on Wednesday. Obviously, a big move either direction. I'll be sliding down the edge of this graph, and that is the downside to Iron Condor or a Strangle type strategy. The big moves in either direction are not good for us. So I much preferred things to be sideways and neutral and back and forth. And we have not seen that sort of price action recently. We're definitely into a uptrending momentum strategy, which begs the question: if we're in an uptrending market and there's definitely momentum to the upside and everyone seems bullish, why wouldn't I just become completely bullish and just close all these short calls and maybe even leave this one on and just have make money all the way up as the market rallies to 2500 and beyond? Well, my answer is that even though it appears that that's currently what's happening, I have no idea what the future is going to hold. And I certainly have a difficult time personally buying all-time highs. And this has been a 7-year bull market, which is one of the longest in all-time history. It seems like it's a little bit overdone to me. We're due for a pullback, or at least a consolidation or a pause. I mean, I don't expect a crash, but just not new highs every day. But I've said that for many, many months in the last few years, and I've been wrong consistently. So I might take more loss on these calls. But it's a defined way. I've got, as we move up, if I start losing some money, I'll just take these for a loss. No big deal. That's part of the price of doing business. February, on the other hand, is looking much, much better. And once again, I've tried this little back ratio trade in addition to selling some vertical, and it's a bit of a convoluted mess, so I won't try to go through the entire thing. If you want to decipher my positions, feel free to do that. But essentially, I've sold a bunch of puts and verticals over here, and I've bought an extra put for the downside protection. That's why it looks like that. And then I have not sold a call on the other side, so this is just a straight bullish position. So if we go up or down a little bit, stay anywhere under this range over the next 66 days, at some point, this purple line is going to continue to rise and rise and rise as the time decays. And so if we move up higher, that's going to be beneficial for me. If we just stay here, that's fine. If we move down a little bit, that's okay. The only problem is a really fast, sharp move down. And if that happens, this extra put should offset some of this pain. So overall, this is looking like a pretty good position, especially in an uptrending market. So I'm not inclined right now to do anything to touch this. This P&L is fairly accurate because I've opened these and haven't had to modify them whatsoever. So we're about $1,000 out of a potential 4,400 or so. That's not so bad. And we get around the halfway point, I'll probably take some off as partial profits and then try to get the rest around 75%, which would be around a $3,000 profit on this position. So those are my current positions. In addition, I have some stuff on gold and bonds, but I think I'll stop here. Just as a brief overview of what I currently am trading and how I'm sitting and what my concerns are, namely a big announcement by the FOMC on Wednesday, which could precipitate a large move, which could cause me to have to take action. Obviously in February, these longer term trades, probably not, I really don't have to do that much. So we get a 50-point move either way, up here to 2,300, well that'd be just fine, obviously. But even a move down to 2,200, I mean, that's not terrible. I'd hate to take that loss temporarily. But it's not a tragedy, and I certainly am well underneath this this tent, so I can stay here and let time decay or have a rally back, and that would be just fine. But in contrast, If we get a big move in January down to 2200, well, that's definitely going to be something that causes me to take more action, because this slope of this purple line starts to get pretty steep, and I do not want to be sliding down the edge of this line in either direction. So a big move on Wednesday will definitely cause me to have to take action to defend either side, no matter which direction it takes. So that's it for today. Look forward to showing the positions tomorrow. We'll see what happens on Tuesday. I would anticipate it'll be a fairly quiet day, waiting for the announcement on Wednesday. Of course, you never know. New news can come out, or for whatever reason, people can decide they want to push the market around. So I will be monitoring, and my ideal days are when I don't have to do anything, and we just sit here and it'll oscillate in between my positions, and just time will pass. We'll make a little bit of money, and then we'll see what happens on Wednesday. So until tomorrow, thank you very much for watching.